Hello and welcome to ET Commodity Talk only on ET Markets Live. I'm Neha Vashisht, your host. Today we are here with Anindya Banerjee from Kotak Securities to decode what's really happening in the commodity world. Thank you so much, Anindya, for joining us today on ET Markets Live.
Thank you for having me.
All right. Anindya, let's start with gold and silver prices. The prices are soaring due to trade worries right now. Trump's tariffs on Euro countries linked to Greenland has also escalated the trade wars a lot. Is it too late to jump on the precious metal wagon?
No, in fact, see, if you look at the gold and silver market, I'll let's take gold first. We'll
Hmm.
break it down into two kinds of factors. One is a structural factor, which has been on in this entire bull run, and one are factors which keep coming from time to time. Like as you mentioned, Greenland. Now, I think just a post happened a couple of minutes back, where he
Hmm.
yeah, included Canada into the American sphere. So all these
Hmm.
things will be transitory factors which will have a positive impact because it increases the geopolitical tension. But first, we need to address the structural reason. The structural reason is that we are going through a phase of monetary reset where every hard metal price, be it gold, be it silver, be it copper, be it a platinum, they're all appreciating in value. It is not happening because of suddenly the global GDP growth estimates have surged. There is a new demand center. That's not really
Hmm.
the case. It's demand and supply. It is primarily the currency in which they are represented that is collapsing. Against, it is not
Yeah.
collapsing. But the US dollar is not collapsing against other fiat currencies. Yes, yeah, it is. If you look at outside the Indian rupee, but it is literally collapsing against the hard metals which are finite in supply and which are key part of the global production process. So that is, it's
Hmm.
a monetary reset where commodities have become the new currency. So that's what is happening, and in that, gold and silver are the two best monetary metals in historically. That's why gold and silver has outperformed every other asset class and of course every other commodity over the last
Hmm.
1 year, last 5 years. So this is basically a currency debasement trade. So now coming to
Okay.
the prices, yes, the overall outlook on gold, which is currently around as we speak, it's at $47.22 per troy ounce. It can head towards even $5,500. Our immediate target was $5,000. Means last year when it was around 4,300, our first target was 5,000. That is almost there. So we think it can even scale to the heights of 5,500 or more, because the as US nears its midterm elections, that's in November. If you look at the Trump's policies and his statement, it's clear he wants to spend a lot more money in the economy, giving out tax breaks, giving out freebies, etc. And he wants Fed to backstop it by buying the long-term debt or short-term debt. So basically, you can say sharper interest rate cuts and a sort of a QE. So all these things means the dollar debasement rate will get even more fuel. So which means gold and silver can do exceedingly well
Hmm.
in dollars, but volatility is going to be high, especially when it
Okay.
comes to yes.
Okay. Alinda, so what is the best strategy at this point for gold and silver right now?
Right. So I just talked about the gold price target. Now coming to, I'll just touch upon silver and then come to the strategy. So
Hmm.
silver being it's also a critical industrial metal. It's now having a better appeal than gold because it's like gold plus industrial critical mineral. So
Yeah.
silver price,
Yeah.
we won't be surprised if it scales up another 60-70% in this year. So currently it's almost $100. So it can even
Hmm.
head to levels of 160 or $180 if I look at the overall peak in 2026, because uh, it it is these two engines which are working, the monetary debasement as well as all the industries, the governments are storing, trying to hoard silver, and plus the investors are also joining in. So, as I said, the volatility is going to be far more in silver prices, and because of
Hmm.
which our portfolio allocation to gold and silver has to be proper so that we can withstand this volatility. So we would
Okay.
suggest one can look at 60% gold and 40% silver. Though silver looks much more promising, but considering the enormous amount of volatility which we could see, it is better to have a slightly lower exposure to silver and higher exposure to gold.
Okay. Anindya, one more question. You mentioned that there could be a lot of volatility in terms of silver, but do you think that time-based consolidation is on the cards for either gold or silver in the near term? And if yes, what can investors expect at this point?
See, okay, so I'll just put it this way: what can trigger a time and a
Hmm.
price-based correction? See, the small, I mean to say, the corrections which last 5 to 8 days are keep happening. The last one happened between December 29th and first week of Jan. But a larger consolidation which span months would require either a major fall in the global equity markets, because as I said, the current trade is that equities are rising. I'm talking about the US equities or the global equities, because of massive money printing exercise which is happening, and because of which gold and silver is rising faster because it captures that money printing much better. So as long as this equity reflation cycle is on globally, I think this kind of a consolidation looks less likely. Only when we see a very deep cut in the global equity markets, then we could see silver prices fall, like it fell in April of last year when Trump had imposed the
Hmm.
first round of tariffs. We had seen a very sharp fall in the equity markets, and with that, silver fell 20% in just 3 weeks. So that
Hmm.
kind of situation, yes, we can get a time and price correction. Or if we get into
Okay.
a situation where the rupee starts appreciating quite substantially. But if the rupee starts appreciating quite substantially, what happens is that that can only happen when the overall dollar is being uh, is being devalued. Generally, when the dollar is getting devalued, gold and silver should do well in dollar terms. So it should also rise substantially, right? So that factor also may not cause a deep and a long means time correction, both of price and time. So I think something which can trigger a time and a price correction of significant magnitude is if we get into a equity market fall, a significant one in
Okay.
US. Yeah, so that can,
Okay.
and so that's why investors can actually have a mix of lump sum and SIP, because
Hmm.
a lump sum approach will help somebody to ward off this FOMO approach, because if somebody waits for a correction, what can happen with the prices constantly rising? One can get
Yeah.
can invest at a wrong price. So it's much better to have some part invested now and put the rest into a sort of a SIP mode and take the benefit of these corrections as they come along.
All right. We were discussing a little bit about domestic premium before our session. So there's a surge in silver domestic premium, as you told me, and MCX is around 8 to 10% premium over COMEX. Can you explain to the viewers what's really happening when it comes to the landed cost and
Right.
premiums right now?
Yeah, it's a very interesting question, because this is a big shift is happening in the silver market. See, globally, the benchmark for silver and gold has always been LBMA, the London Bullion Market
Mm,
Association. Even MCX or anybody, even the Shanghai prices, they would quote the LBMA price and then the customs duty, the currency, and a bit of
yeah.
premium or discount depending on the seasonality of demand, right? But what has
Mm,
happened over the last, I would say, 6 to 9 months is consistently Shanghai and now India, basically the Asian centers, they have started to quote a significant uh, premium like 8, 9, 10. Sometimes even Shanghai has quoted 13, 14% to LBMA and COMEX. Now this doesn't
mm,
happen, because why it can't happen is somebody can simply do an arbitrage. These large bullion banks or large commodity players, they can source the metal in West and supply it and
mm.
sell in the Asian exchanges like MCX or Shanghai, and deliver the particular metal. But that is not happening, which basically means that silver is not moving freely between West and East in the world. So, which is a
Okay.
fact, because if you look at the inventory position of both COMEX and LBMA, the inventory is depleting fast and it's at record lows. Even Shanghai inventories are pretty low. So that is why that's arbitrage is not closing, and the premium is being constantly offered because Asia is wanting the hard metal. So if you look at the Indian imports of silver, it has skyrocketed since every quarter over the last 5 years. Right, even 2025 was a sort of a record import which India did. Now these means that we are offering that premium so we can get that hard metal from the world. And so this is the basic difference which has happened. And over the last, I would say, a week or so, MCX has started to see this premiums rise. We have seen the premium hover around $3-4 or around 4% over the landed price on MCX. Now it has surged to
Hmm.
8-9. In the morning it was 10. So
Okay.
it just one hand, as I said, it basically denotes a shortage in the global market, not India, in the global market. But on the other hand, it also means that I think a lot of speculative buying is also happening, and that speculative buying is pushing the prices much more than its fair value.
Hmm.
Same thing is also happening in the ETF. If you look at the ETF, the current ETF prices, the most liquid ones, after a long time, I think I think last time happened was October of last year. Since then, for the first time, we are seeing ETF prices quote a premium over the landed price. So which basically means that I think that the speculative or the retail uh, demand is now coming into the market, be it through MCX or be it through the ETF route.
All right. Let's also talk about the current geopolitical issues going on around the world right now. We have US Russia issue going on, then unrest in Iran, and then we have US Greenland issue as well, along with European countries. How is this all affecting the crude right now?
See, crude, as far as Venezuela is concerned, honestly, if you look at the short, even let's say 18 to 24 months picture, we don't think Venezuelan output can rise that much that it can really impact the oil prices because for various reasons. But Iran is a major flashpoint. And because it's a major oil supplier, and the quality of oil that Iran supplies is high grade oil, means it's light sweet
Hmm.
crude. So, if Iran tensions rise, which we think it looks like the looks of it, so then I think the oil prices can jump once again. But yes, the thing is that these are spikes. They cannot be sustained because the overall scenario is such that the oil demand growth is not strong enough to basically take on the large supply growth which is coming from non-OPEC, which is outside the Gulf or Russia, like from North America, from South America. The kind of supply growth which is coming, that is more than enough to offset the expected demand growth. So that fundamental is not changing. And Iran might create a spike of, let's say it's currently around 63, $64. It can head towards 75, in a worst case, $80. But it will be a spike where it will be sold into. But that spike is definitely a possibility. So I'll definitely keep an eye on Iran and how things are unfolding there.
All right. Let's also come to the levels. So what are the levels to watch out for this week, and what can we expect in the coming week?
See, currently, gold, as I checked, is around 1,48,500 odd. We think that around the volatility has overall increased. The average daily volatility on MCX is currently 2,500 to 3,000 rupees on gold, and close to 15 to 18,000 on silver on the price. So I would say 1,40,000 on the downside is a major support. Wait for pullbacks because those come. There's no need to chase price. Wait for a pullback to buy. A stop loss should be below 1,40,000. And upside, we expect it to gradually inch towards 1,60,000 and 1,65,000 on the MCX front month futures. Now coming to silver, currently silver is around 3,22,000, almost 3,23,000. So here the volatility is going to be very high. Wait for a pullback, and the pullbacks are in the nature of 15 to 20,000. So around 3,10,000, 3,05,000 is a good entry zone. Stop loss will be larger here, below 2,80,000, and on the upside we expect it to head towards 3,65,000 to 3,70,000 on MCX.
All right. Well, this marks the end of our segment for today. Thank you so much, Anindya, for taking out time and joining us today on ET Markets live stream. It was a pleasure talking to you today.
Thank you for having me.
Thank you so much. Thank you, everyone, for joining us today.
Thanks.